And next up, we have Lucapa Diamond, who has flagship projects in Angola and Luteto, as well as early projects in Western Australia and Botswana. So speaking today is the CEO and Managing Director, Stephen Waterwell.
Thanks, Jared. Thank you to StockPal as well for the invitation, and welcome to all of those that have tuned in. Thank you for giving of your time. I only have 10 minutes to take you into Lucapa as an introduction and overview what has been a strong start to the year. So let's get straight to it. First of all, please note the cautionary statements. This announcement or this presentation has been released to the ASX, and you can find a copy on our website. So please do peruse the cautionary statements. Lucapa's been on a considerable journey over the last few years. First off, we are an Australian company listed on the stock exchange, and we have transformed significantly. Up to 2014, we were just a single explorer in one country, but with investment in production and expansion, we've transformed into a multi-asset producer and explorer across 4 countries, where today we own 2 niche high-quality producing mines, and we have 3 primary source exploration assets. 2020 has been a tough year for a lot of people, most notably the diamond sector. It forced us to shutter all of our operations, but the board and management teams and site teams maintained focus, and we continue to focus on this growth because we know how resilient the diamond sector is. We know that it bounces back very quickly. We've seen this after the global financial crisis. So we maintained our focus and grew our resources as well as our capacities at our mines. And today I can say that on our production assets, we are at the finish line, and we are looking very forward from this year on to cash flow generation and returns coming back to Lucapa from those producing assets. Just to overview our assets in our portfolio, I'll split them between production assets and exploration assets and how we've developed them. First and foremost is our oldest mine. It's just 6 years old, the Lulo mine in Angola. It is a secondary deposit or alluvial mine. Our youngest mine, the Matai mine in Lesotho, is a primary hard rock source or a kimberlite mine, and we have successfully explored and evaluated these mines, taking them from very early stage projects right the way through. We successfully scoped development plans. We raised the funding through equity and debt structures. We have brought both of them into production, and we have, as at the end of this quarter, expanded both of them with the finalization of the Matai expansion in Lesotho. So not only have we brought them into production, but we continue to build on the economics of them. But most importantly, we're not just happy with our returns from the mine gate and marketing our production, which is a very niche high-end production at mine gate. We have also entered into very, very unique cutting and polishing partnerships, whereby we're also accreting value back to our mines from beyond the mine gate. So this is an extremely valuable work stream, and I think over the next 3 to 6 months, you'll see some of those margins reflecting quite handsomely in our income statements. Our exploration assets, we have 3 of those. Our biggest exploration asset is the Lulo joint venture in Angola. It is a primary source exploration asset, and it is our most advanced project, where we have identified a number of targets and are quite the way through in terms of our program there. We do have 2 other primary exploration assets in Australia and Europa, but given the 10 minutes that I have with you today, unfortunately, I'm not going to get the time to outline those to you. But in terms of our mines, we have developed 2 very niche mines in Lulo and the Matai mine. When I say niche, it is large, high-quality diamond productions. For example, we produce diamonds very, very large and very, very high value. There are 4 plus 200 carats that we've recovered from both mining operations. There are 5 plus 100 carats that we recover from both mining operations. Unfortunately, we don't have space on the slide to present the other 23, but we also recover a fair smattering of our own pinks and fancy colors. And because of the combination of those diamonds in our resources, we boast the highest and 3rd highest dollar per carat diamond mines globally, number 1 and number 3. So, very, very unique niche assets. In terms of our mines, the Lulo mine is a 500,000 or 500,000 bulk cubic meter per annum capacity mine, equivalent to approximately 1.1 million tons. It is the highest dollar per carat diamond mine in the world. In 2021 to date, it started the year as it finished last year. The impact of the expansion that we underwent in 2019 and early 2020, and unfortunately didn't feel the impact of it through the pandemic, but that fleet is now being felt, and we are currently on a record quarter in terms of throughput, and we look forward to bringing that to the market as we announce our quarterly in the next couple of weeks. We have recovered 6 plus 100 carats in just 3 months, together with 2 large pinks as well. We are on record revenues and we are on record prices. So that mine is performing very, very well as 2021 has started. Equally at Mutai, it is a 1.6 million ton per annum operation now, thanks to a recently completed expansion. It is the 2nd highest priced kimberlite mine in the world, or the 3rd highest overall. In terms of 2021, it has not been left behind by Lulo. It certainly has had its own successes as well. It has recovered a 213 carat D-color diamond, its largest D-color stone to date. It too is recording record revenues and record prices. So very, very stellar performances from our 2 producing assets. When we add to that the cutting and polishing margins that we expect from those mines, we are in for a very, very strong 2021. As I outlined, or we outlined in the annual report, because of the closures in the sector last year through the pandemic, the cutting and polishing sector did close down, and there were a number of diamonds in cutting and polishing that were not completed. Those margins, together with the diamonds we put into the cutting and polishing partnership in 2021, will be realized in 2021. So 2021 will be a bumper year when it comes to our cutting and polishing returns. Those are 2 exciting assets, but of equal excitement and thrill is our advanced Lulo kimberlite exploration project in Angola. We're on the very same ground that we are recovering these large alluvial diamonds. We are searching for the very source, the hard rock source of these assets. It is a large stone environment. We have recovered over 1,300 specials, diamonds greater than 10.8 carats in size, and of that, 22 of those have been greater than 100 carats. Very high quality diamonds, and therefore the economics in a pipe is extremely increased dramatically because of the value of those diamonds. In terms of have they traveled very far, large stones, they are heavy, irregular shaped, jagged edges, show no signs of transport. And when that happens, they have not traveled very far. You start to look around you and proximal to you, and underneath us is a significant kimberlite province, which we have already proven to be diamondiferous. So those characteristics make it one of the most prospective diamond exploration projects in our space. As I mentioned earlier, it is an advanced program. We have completed a significant amount of work. Have a look at the pink dots there. Those are the geophysics anomalies. There is a lot of work we have had to do, systematic work we have completed. I won't be able to go through all the programs that we have completed, but safe to say that we have narrowed everything down to 18 high priority kimberlites that you can see on the screen there in yellow. We are currently bulk sampling those. We have focused in on the Canguige catchment area where, because of the sampling results that we got from the Canguige River, we identified the targets in that catchment area to be of high priority. Imagine our excitement when just in the adjacent mining block 46, we started to recover large diamonds, diamonds greater than 100 carats, and we recovered 6 of those in just the last 3 months, together with 2 special sized pink diamonds as well. So very exciting times for us in terms of our kimberlite exploration project. We are currently in the advanced bulk sampling stage, and when the wet season ends, we look forward to re-engaging those activities. We too are talking about majority stake interest in the program. We believe with the majority stake, it will open up significant funding opportunities and provide the impetus to the activities that this ground deserves. So we look forward to bringing those to the market as well in due course. In terms of any investment in any market, it's important for you to understand the industry in which you invest. If we look at the overall rough diamond price index for the last 2 years, it is a very good barometer of where our industry has been. If you look at the first 6 months of 2019, thanks to oversupply and low liquidity, there was significant downward pressure on prices. But as the majors stemmed supply into the market, we started to see a good lift up in diamond prices. As I mentioned, 2020 was a very tough year for our space. As soon as the pandemic forced country closures and market closures, we saw a significant drop in the prices achieved for diamonds, and that's even if you could sell them. But thanks to everyone being at home, possibly some stimulus checks as well, the e-commerce or online retail stores did very, very well and provided some support to our sector. But as the GDPs or as the economy started to open, as the demand for the festive season came through, as the emerging markets started to grow again, because of the high liquidity, you saw a significant ramp up in diamond prices. And that has been a very, very strong start to 20, or the result of why we've had such a strong start to 2021 as well. But if you compare that to how the diamond equities in our sector have performed, I've overlaid 4 diamond equities, including Lukapa, our listed peers in Gem Diamonds, Lucara, and Mountain Province. As the diamond market came off, you saw listed equities started to come off as well. In the second half or last quarter of 2019, when the market started to recover, this did not reflect in the diamond equities and it continued to subside. I think perhaps the talk and the news of the pandemic resulted in a softness there as well. As the market crashed when the pandemic hit, so did listed equities. How did those listed equities perform relative to the diamond market as they have come back? If you have a look at how they have performed relative to the sector, they have not shown the same return and recovery that our sector has seen in the last 6 months. So with diamond prices back to January 2019 levels, which are higher than pre-pandemic levels, we see a huge gap between the equities and the market. So therein, I think, lies a significant opportunity in terms of investments in our space. Importantly as well, that is an overall rough diamond index. We operate in a very niche high-end space. And if you look at the literature as well as the prices that we have reflected over the last 3 to 4 months worth of sales, you'll see a significant bounce back in prices. And these prices for the high-end goods have outperformed the commercial quality goods. So the return and the bounce back in our sector has been better than the average. To wrap up now, with both production assets now delivering strong returns or strong productions and the diamond market showing good strength into the near term and medium term, 2021, we look forward to strong cash flow generation. In terms of the mines, what do we expect for 2021? Well, we expect records. They are both at expanded capacities. We will have volume records. We already have production records. We will have large stone frequency recovery increasing. We will have price records. We will have rough revenue records and polished revenue records as well. So with the expanded capacities and our reduced per unit operating costs, clearly that is going to positively reflect in the profits that we're going to generate. And for the first time in a couple of years, we're going to see strong cash flow generations coming back to Lukapa. Over the last 2-3 years, as a result of our focused investments on production assets, we've seen money going into those assets. What we're going to see now is money coming back to the center from those assets, because we are, as I mentioned earlier, we're at the finish line, and we've already seen through our announcement last week that Mutai has repaid a portion of the loan as well. But not just from one mine, it is coming back from 2 mines. In terms of going forward, we will be providing the market with our maiden guidance for production, and we look forward to bringing that to you in early Q2. With regards to exploration, we're looking forward to recommencing our bulk sampling programs at Lulo. We certainly are excited about that, as I mentioned earlier, with all the recoveries that we are seeing in and around the Kangwij area. And we also look forward to bringing you the conclusion of the majority stake discussions, because both us and our government partners do want to see impetus and expanded capability on the Lulo kimberlite exploration. So in summary, we are just 3 months into 2021, but it is already a defining year for Lukapa on a number of levels, most importantly, cash flow returns. So with that, I'll conclude.